Welcome to another episode here on WFinance&Stock. Finally, we are heading towards earnings season, and one of the first companies to provide everyone, with some earnings here is FedEx. It's a very important transporting logistic company in the USA, even though they obviously have doing or are doing business globally. And why do we want to take a special look at FedEx? Because they are providing us with perfect update on the market as a whole, how the economy are doing, and especially the economy of everyday people, because the type of service that FedEx are providing are basically moving packages from one place to another. So really, it's a way of taking the temperature of the economy as a whole. So in that way, it's a very interesting um, company to analyze, and we can't wait for the big earnings season. So let's just make a head start here, and let's get straight down to it. Before we start, just don't forget to subscribe and like this video if you want the channel to grow and continue, and if you like the type of content that we provide, and if you want something else, just to write in the comment section, and let's build this community. Anyway, here we go. FedEx reports third quarter diluted earnings per share. And here we see their earnings, basically $3.76 per share. They're also saying that they completed 500 million share repurchases during the quarter. So they repurchased some stocks according to plan, and they will provide us with some outlook here. So here we have fiscal 25 and fiscal 24. So we can compare the revenue between the years for the specific quarter. So the revenue going up a bit. The same with the earnings per share. So the revenue for 2024 was 21.7 billion, and as reported, 22.2 billion. And the net income is now 0.91 billion instead of 0.88. So they are growing a bit, and what we need to analyze here is that something good? Is that the positive signals we want? Let's see. It all depends on the market value of the company and what people who holds the stock are expecting going into the earnings. So the earnings might be the revenue going up, the earnings per share going up, but the stock might still after hours go down because the expectations were higher. So here they say they improve their profitability while navigating a very challenging operating environment. So that's our first important clue here, that FedEx are providing us for the market as a whole, including a compressed peak season and severe weather events. So the weather has been kind of problematic, they are telling us. It will be interesting if the weather conditions will continuing in the future to get worse and worse and worse. That might be the case, depends on who you ask. I am not too concerned, even though we have seen the weather conditions began to maybe shift a bit. But it's hard to tell. I will not put that as something we can just rely on. We just have to wait and see. But maybe it's something that will occur more often. They are saying they're very proud of the team and executing on our transformation efforts while strengthening our value proposition. So, and also improving the customer experience. So they are, despite having like this challenging environment, they are saying that they are doing everything they want and can to navigate this complicated situation. So they say they have doing this drive program to reduce costs, and we already knew that they are doing that, and it's actually working. They are reducing the workforce, and they are putting together different parts of the companies to make it more centralized, keeping it streamlined, etc. You can learn more about Drive by just typing drive and do your own analysis. But it's a classic, uh, you know, cost cutting program, and they are actually doing quite fine. And this is what we want to see with artificial intelligence, with robotics, etc. With this type of transportation companies, you should expect them to being able, like 2025, to streamline a bit of their business. Um, so the Federal Express segment improved, and obviously they have it's the improvement has been offset partly by higher wage and purchased transportation rates, and also they lost this U.S. Postal Service contract, which is quite important. So they have to navigate that type of loss also. Um, Here they are telling us that they are have completed its 2.5 billion fiscal 25 share repurchase plan. So that's good. They have enough money and enough cash flow to repurchase purchase stocks, meaning they are giving back to the people, the shareholders. So that's always good if they feel confident by doing that. 1.8 million shares were repurchased. I don't know if my pronunciation of repurchase is correct. Anyway, um, with a decrease in outstanding shares benefiting third quarter results. So yeah, basically that's great to see. They still have cash flow. Obviously, it's a big company, so that's what you can expect. But the interesting thing here is going forward, what is the outlook? Has the outlook changed any bit? And do we have any more clues about like the environment as a whole? And then I mean like the economic environment, obviously in USA, but FedEx also like if it's really bad there, it probably not is just the USA. It's probably more. And here they're saying that they are unable to forecast the fiscal 2025 mark-to-market retirement plans, which means they can't give us an exact outlook. So that's something that I don't want to dive too deep here. I want to go down here to the revenue and earnings and capital spending forecasts, and we see that revenue are flat to slightly down year over year compared to the prior forecast of approximately flat, meaning they are telling us now they're doing worse than they were thinking before. So this is something new. They're saying they have some problems here in the market, and I will keep that in mind as a whole. So this gigantic transportation company actually have decreasing their outlook in terms of revenue. Keep that in mind if you have companies similar or in areas like FedEx. It can also mean that their partners are selling less, etc. Very interesting. Also, the earnings, they are telling us they are slashing earnings to $15.15 per share from $16.45 per share. So the earnings are also going down, and that can mean they have problems just to keep that cash flow going. They need to invest more in the company to stay relevant. The market conditions are getting more harsh. It can also mean that there are inflation. Fuel can be more expensive. The cars are getting more expensive. New transportation are getting more expensive, and that doesn't just affect FedEx; it also affects the rest of us. So it's very interesting to see that they can't really continue to increase their earnings per share. So if I was a shareholder of FedEx, I'm not, but if I was, I would really keep that in mind. Can they go back to my expectations, or are these like a new era? Before we continue, I just want to zoom in here. They have such a great logo. You see there? Then the arrow there after the E, before the X. That's genius. And also here, they have a spoon. Anyway, I just wanted to let you know they actually has a very genius logo. Um, the capital spending of 4.9 billion compared to the prior focus of 5.2. So they're actually not increasing the spending either. So keep that in mind. Despite the earnings going down, they are also decreasing the capital spending. So this is not good news, actually. They have a priority of investment in network optimization and efficiency improvements, including fleet and facility modernization and automation. So they want to use new type of vehicles to go into a modern era to really optimize their businesses and are waiting for like the technology to just keep going. So obviously FedEx will survive and keep thriving in terms of cash flow, but they are having really problems at the moment to just increasing that revenue and that the potential earnings. They are going into a period where they have to reinvest probably and continue to do so. Do so. So we will probably see more cuts, like in personnel, etc., and that will affect people if they lose their job. FedEx is a big company; it might not get very easy for them to find a new one, and that can drive jobless, joblessness, etc. So if this is like a measurement of what's to come for other companies, we might be in for a wild ride the coming 3 or 4 years in terms of job market, etc. We will see. Um, so they're saying here what I did talk to you about before: the Drive transformation program has saved them 2.2 billion this year. So they are really cutting cost here fast just to keep that earnings per share at least quite high. It would be like an insane drop if they didn't have the permanent cost reductions. So they are really fighting hard here, FedEx, to have their nose above the water, you can say, because they do these massive cuts to keep the earnings per share high. But in the end of the day, they will the cuts affect the core business? That's the thing we have to look at. Will they lose revenue long term because of the cuts? Everything needs to be analyzed, but it depends on what people they cut, if the centralized units, etc., are performing well, if the leadership are great. So you can't just cut and expect it to work magic. You have to have that company structure and leadership. So let's wait and see. The forecast assume the company's current economic forecast and fuel prices expectations. So if inflation takes more steam, so to speak, the forecasts here might not work and it will be even more costly for them. So they need the fuel prices to stay down. But we know we have this trade war going on, so who knows what's going on here. Oh, they are saying here from the executive vice president and chief financial officer, CFO. Our revised earnings outlook reflects the continued weakness and uncertainty in the U.S. industrial economy, which is constraining demand for our business-to-business services. Despite this uncertainty, I'm confident we are well positioned to execute on our transformation initiatives and create stockholder value. So that's like a classic confirmation of stay calm. We are doing all the right things here from a shareholder perspective, etc. They are trying to calm us, but I can say that this wasn't the best earnings, and we will we have to keep that in mind going forward. Don't have too high expectations on earnings for, I would say, like the retailers, etc. Like maybe the food industry, the clothes industry, shoe industry, etc. These type of companies might struggle a bit if um, FedEx is struggling as much as they do. So that is something we need to keep in mind. And obviously, this earnings was a couple of hours ago, so we know that today, March 21st, we can see how they are doing in the market. Um, so here, let's let's see here. They're doing. And as we thought, they are down a lot here, 6.3%. So it's not a good day for FedEx. And we could already figure that out based on their earnings report I just talked about. And we will see what's happening long term. I mean, their stock will not get crushed here, but obviously, long term, this might put the expectations in a new light, so to speak, meaning that the long term investors in FedEx can't really trust them to having fully control of the earnings, the revenue, etc. They are usually, when you invest in a company, you always want them to be a bit better than what they are going out and say. The leadership in companies are often telling us, "Oh, a revenue number, earnings number," and they are supposed to be a bit better. So I would say the marketplace are expecting the same or better. So when a company actually performing like the same or worse in terms of earnings or revenue, that company has some problems at the moment. And this is what we see here for FedEx, and that's why the stock is down. And I will keep that in mind for when I watch the coming 2-3 weeks with a lot of more earnings. I also know that, for example, Nike had earnings yesterday, so let's just see how that went. Also a big company, and they are down. So Nike are also down here. So two indications that the market is not like smoking hot here. We will see some stocks that are going to trade down the coming weeks, but obviously, I think in some sectors we will see stocks overperform also. But if stocks like Nike are going to have to, or companies like Nike are going to cut cost, FedEx cutting cost, maybe they are spending less at marketing, advertising. Also, companies like big companies that I invest in, like Meta or Microsoft, etc., will get hit by that type of um, cuts in spending. Meaning this could be a signal for the market as a whole. We will see the coming weeks what will happen, especially in the long-term outlooks for the companies. So it's a bit of an uncertainty here. So keep that in mind now. If you are getting a feeling of putting your money into the market, don't put everything in at the same time. Put a bit in every month, just to spread out the risks. I always say be a long-term investor. Being a trader is so hard, and it's not something I advocate for the common man. But some people can make money at trading, but it's very hard. The best traders often are employed like by banks, and they have the money to just reduce that psychology, the stressor. Um, so keep that in mind. It's hard to be at home and just invest short term. So that is what I can say here. Thanks a lot for tuning in today. It's wonderful to see our community growing. And until next time.